Hello, this is Brian Lysing with Financial Brokerage, and today I'd like to share an idea that's come up quite a few times in the last few months. And I'd like to start by asking a question. What happens to a term life insurance policy when it comes to the end of that level term period? Well, we know that these policies are designed to go into what we call annually renewable term, meaning the premiums increase every year to match the cost of insurance that's needed for that client's age and that amount of coverage that they have. And usually these premiums can go up just astronomically. At least that's the common thinking. And because of that, we think that, well, nobody actually does this. They see that first bill that comes and they don't bother to pay the premium because it's so high. Well, we've come to find out that a lot of people do pay that premium. It's not as cut and dried as we usually think, and the only reason is nobody is reviewing the policies with the clients. And a lot of these policies, maybe the clients never see the statement. The premiums are being paid via EFT. It comes automatically out of their banking account, and the initial increases are not that great. I mean, they're small enough in some cases that whoever's paying the bills in the household might not notice, or they're not going to remember the previous bill versus the current bill because it's not that big of a change, or they might just expect it to go up, just like a lot of other things increase over the years. So it's very important to stay in touch with your clients and make sure they know this is going to happen, so that you have some opportunities to help them out before they get to that point in time. And you shouldn't just ask your clients, you should be asking everyone. A lot of people have policies that were written by somebody who is no longer in the business, or maybe they've moved to another state and they're just not in touch with the original writing agent. Well, there's no reason why you can't help them out and offer to review their policies that they already have in their files. Now, if you catch it early, you have an opportunity to do a lot of stuff with your clients. One, you might be able to help them extend their coverage with a brand new term policy that would be fully underwritten, or you might help them purchase a permanent policy so you don't have to worry about the term expiring ever again. That again would be fully underwritten. Now, if clients aren't in that great of health, you might help them convert that term to a permanent plan of insurance, and that avoids the whole underwriting process to keep the same rate class they had originally. Now, if you catch this a little too late, say the client has already gone into that ART status, well, you're not going to have an opportunity to convert the plan. Hopefully your client is still insurable, and if that's the case, you can come out looking like a hero, because now you can help them save money. This increased premium, you can now help them find a policy that costs a little bit less than what the increase has gone to, and level that out over time, and again, come away looking like a hero. Let me give you two examples that we found in the last few months here. One, I was speaking to an agent who did actually conduct the review with his client and caught the term expiration period about a year ahead of time and replaced it with a new level term policy. That's great. But one thing they forgot to do was to have the client actually cancel the old term policy. Now, maybe he did suggest that to the client, but the client never did it. So about a year later, we were able to go back to help them go back to those clients and let them know, look, this extra $100, $150 you're paying every month, you don't need to. Here's what you need to do to cancel the policy. Now he's found them some extra money in their budget every month, and they can do something else with that. Another situation, this was a little more costly. Producer I was working with works with the business, and the business had taken out a key person policy on I think on the owner of the business a few years ago. Well, the accounting department of that business was paying the premiums. They didn't notice, they didn't think to ask the question when the bill came, and the first year it went to ART, they paid a little bit more. The second year they paid a little bit more. Third year they were paying about $3,000 more than what they had originally. Nobody noticed because nobody was reviewing the policy. So it's very important to review term policies with your clients, with other people's clients, because you can end up saving them a lot of money, and you're going to come away looking like a hero. So see what you can do with this, and we'll talk to you again next week.